Welcome to TradeTheMBI.com. This is John. This report is for the 25th of April. And as we near the end month, we can see here, well, I added in the alternative paint bar so that you could see that we were coming into this little divergent rise here, even though we cleared it out once we got the green back over. But we've now reached where the cyan here is above our zero line, so that's a sell signal. We've also crossed over with the green below. The green is now also below the red, so all the configurations you need for lower have been set up. Interesting that potentially we could form a cyan candle, which would project beginning of the week to be a positive day. We can see in the past how well those have worked, all the little plus signs you hear going back. So we'll keep an eye out for that one. But overall, it is the beginning of a sell signal. And we got a very similar configuration to it last time over here. And it just kind of proceeded a little bit across and then finally broke back out. We'll be looking for tilt up in the green. Pivot would be the first indication of that. But otherwise, that is all negative. Also, we see crossover NQ potentially here with the red. We still have the green above, so that hasn't really decayed much. And you still need to see the steel dip below, but also at the precursors of what would be a dip. When you look at the extremes on all of those, though, the extremes are not in bad situation. They're like still above the -50, and they're actually in most cases improving. YM certainly was a little bit weaker when it crossed over and then broke down a little bit faster, and that's actually a little bit stronger spread, even though you have the steel popped up here. The troubling part about that is when you get the steel going up with the cyan, if those two rise together, really doesn't help you from a bull standpoint. What you'll end up getting is your steel and cyan up here, and then you get your three red, white, and green down below, and that creates an even bigger decline spread. So, and it's no different than what I had mentioned before. We were potentially looking for 50% retrace in there. It just tends to be a typical kind of pullback for institutional setups if it's even going to take place. So we'll just follow what we've got. USO had that slight tilt up, but within that negative dip, I would expect that we'll start to see some dark red from here. The slight increase, this is going to have to pick up really quick and make a sharp move immediately. Otherwise, it's likely to stall out here and make a little bit lower low. And that would indicate what we're looking at for a little bit of a market decline. Now, can that overall daily take a couple of days? Sure. So this is why I tell people it's not necessarily the best choice to do a weekly kind of setup on that. You need to have enough time to allow, particularly with shorts, because sometimes they can even go for a week or more before breaking down, just because there's very strong bull tendency to this market, in particular with the backstop of the Fed. GLD on the little pivot made a nice move, but that's still such a big separation. We would look for moves up here in this particular case. Not a buy at this particular point, even though I did put in a bifractal. And what is that? The extreme fractal upside target 126.14 on that move. And it did have, well, we talked about that, it had the blue candle. It started lower, but made quite the comeback on market weakness, and it was not unexpected for what we were looking at. So you can see that it happened with SLV. All pivoted up. Still that huge separation in the DOC between the steel and cyan green, and that not the greatest. Likewise, all we're looking for is the turn down here for the steel as another opportunity to short X. But it could get, in fact, did it get close? What is that up target? Let's see where if we got, didn't quite get up there. The full catfish target 28.25, and the high was 27.88. So I missed it by another 40 cents, somewhere in that range. CLF gave its buy cross, going to do so in that deep red, and you can see that's the kind of separation that doesn't bode well. So likely on the pop here, be an opportunity to buy a put for the retrace back down to the lows to retest that. So that would be something that you'll want to be looking at. And then that becomes attractive in my view if we go back to it real quick just for a moment. Because what I'll do is I'll buy a long put here that's deep in time, something that maybe for the September or so option. And that way, when it declines in price, you can buy the stock. And what you've done is created a perfectly hedged position where your premium has been paid for, you own the stock, and then any additional decline is irrelevant because you have the higher side put with plenty of time built into it. And then you can go ahead and turn around and sell weekly put options as a counter, or you can even do ratio spreads for calls on new buy signals, and it becomes a very effective strategy. It's something I detailed a little bit to those of you that follow on the Skype chat, but I thought I'd mention it here because it is very effective, and it's a lot of what we used to do on a lot of the trades. It just gets complicated to go over all of the different setups every week, and so I just try to give you more of a general concept. AIG, beautiful run from what we were looking at right in that 49, 44 range. Was a consistent spot we had that we wanted to be long above it. And beautiful, beautiful move. WLT, likewise from its transition when it crossed above there, the green continued, but flipped back into 78-minute sell, even though the daily is in a buy signal at this particular point, just it crossed over, but looks like it's going to have a little bit of retrace. And this is exactly what we expected down here, coming back, that it would come up and refill back to that $8. And so it was one of those, like I said, every time it gets back towards the $8, any put sold, buy them back, and likewise, opportunity to sell new calls when it gets up there for retrace. Pretty straightforward trade. JCP just kind of went into a stall pattern right along the zero line here, but it's been in the safety zone with these steals, so it hasn't really done a whole lot. Could even ease up its oversold here as we get green moving above would be helpful. So we'll see how that plays out. And here we're looking at the 50K. I went over this 50K setup as these buys came in because we're looking at it and it's clear DOC sell signal within this configuration. So it was one of those where I said, okay, you don't want to necessarily buy that, but what you do is you go ahead and put your buy stop right up there at the peak levels of it, 1876 plus range. And if price gets back up there, you turn around and go long to it. And if it dips back below, you just sell out at that point, because clearly with this being the dark red, we would expect that, well, at least this low down here at 63 is going to get taken out. So there will be better opportunities, and you can see we're just now, even in this current bar, dipping below the red line. But that cascade lower for the red-white has just begun. In fact, steel is starting to move up, so you could get a pretty wide separation like back over here where those two split up and you end up with a little bit more of a decay. And that's not inconsistent with what we were expecting from a daily standpoint. Let's take a look at the intraday. Okay, here's the 5K. So we ended the previous day here with the nice little buy signal, shot up, continued, and then all of a sudden it started to get ugly right about there where the cyan dipped below. I mean, the red dipped below the white, cyan moved above, green was falling down. It was still in a little bit of a safety zone, but that finally really eroded once you had the cyan full above. And we had marked this 77 area as a short, and the cascade was beautiful. And the point being with this particular setup was we were looking at the retraces of the positive extremes, and they corresponded to this bar right here from the pointer. And what was that low? 71, 75. Even from the open standpoint of it, which was right around 73. Perfect for the retrace, just let it follow through. It was nice. And then we get the nice little pump, but no, we knew that this was not a good one. So I was on the private feed saying, oh, short this pop. Shorted the pop, sure enough, took out the low. And as soon as it took out the low, it was doing so on higher readings, higher extreme, all the perfect things you want. Buy crossover came in, said, oh, well, what are you going to do? You have to buy it. I was done for the day after, the great up move and then down move, but had to take it again. And sure enough, nice run all the way until it went to short configuration, and it was actually a little earlier. It was right back here that it actually flipped over to a full short config for me and flipped over, and there we are. So all in all, pretty straightforward stuff. Let's go back and go through the radar screen, and we'll scroll through the numbers here. This happens to be the NASDAQ. Still a mixed bag, so I mean, very healthy overall from a market standpoint. I know you get all these people who want to declare the end or the beginning of some major move. And sometimes it's not. It's just the normal back and forth. And I really try to get people to stop getting these grandiose ideas, because it doesn't do you any good when it comes to overall trading. I mean, you can look at a stock price and say, okay, yeah, you're at the beginning of what could potentially be a nice down move. So fine, we take the trade and then we start to explore it as it goes. We don't have to have any precognitive or set desire as to what it's going to be. Just take what is and continue to work for it. So here we go. Daily Facebook had been in the sell. Oh, it had a nice move up. Everyone told me I was nuts, and then what did it do? It just completely sold off. And this is the beauty about being able to play your intraday setups along with a daily config. So we don't want FAS, we want FAS. The FAZ is the inverse of it. So cyan being above, still somewhat negative, though it hadn't completely crossed over with the steel moving below, but you could end up with your full sell signal here, just like the market. So interesting to see that on the FAS. Baidu definitely within its sell signal. Now it dropped off too, came back up. That happens a lot at the beginning of shorts. People say, "Oh well, it bought back up." You can, but a lot of times it just means that bulls get tired. This one you have to see a higher extreme at the open, otherwise it's likely to make a lower one. It's still not a bullish configuration in any way, shape, or form. Always nice to see those react. There was one that didn't react to it. Apple was totally outside of what we typically see, and it was an indication of one of those rare times that the move or the news was not known, because they would have certainly reacted to it earlier. Clear sell within that Twitter config right there. Would have liked to have seen the steel dip all the way below there for a conclusive short setup. Tesla trying to turn around to become positive within this move. You're right at a junction point, so it should be an interesting day going forward here, because right at the precipice of flipping over. Have to play that one by ear. Got a little overbought, retraced it, and still within rising config, so that one could be decent. And you'll notice I'm going in the reverse order that we've normally been doing. So PCLN, that's still within a short configuration. Don't even need to go there. Netflix likewise formed a spider after retracing its positive extreme. It still had the potential for a good one, and I still think it's not going to take much of a turn. We just have to wait for it to actually develop on the intraday. But potentially it still looks pretty good. I might have to look at a 78-minute, put that one up on the private Twitter feed, see where we're about to get our earliest things. Because we had a couple of decent buy signals on the 15-minute. It just didn't have enough oomph behind it, the zone that it was developing in. Google, yeah, no, that's still a sell. There's nothing to worry about with that. And Amazon, maintaining the spread here within the narrow. It narrowed up, but now it's starting to increase again, so we should see some heat develop to the downside again for Netflix, and this sort of flattened out. If you get that cross below on the red, then I would expect to see pretty decent decline back here to those lower levels. And let's look at Apple's daily real quick. And look at that. That was bizarre, because that was not within. I mean, fine, we were in what was a buy signal from the red white. We had the green above, and I always like that to follow, particularly as long as the green stays above the red. That usually is pretty solid, but had not made much of an improvement. You had a slight decline of the cyan, green moving up, which was marginally bullish, but we were coming off the deeper red there, so I wasn't looking for a huge, and then boom, it just exploded to that. We had a lot of bifractals on it too if we had those up there, but within this basic buy, we were looking for an opportunity where you would get a sell signal that would be short. But this is one of those things where it's like, well, I typically will follow a buy until you get your sell configuration, but that was really an extreme move. So it'll happen. It's okay though, because they're never going to be perfect. But it was pretty darn good overall for a lot of the other stuff. So no complaints with any of that. Continue to look for me on private Twitter feed. StockTwits. As always, trade well. We'll talk again next week.